Hello everybody, this is Lara with your weekly video for gold for the trading week ending Friday 1st of April. The main or preferred Elliott Wave count, which is bearish, has been expecting downward movement. We've got a lower high, downward movement, although there's been a bit of upward movement within the week. There's a bit of a bullish long lower wick there. Either way, overall, the preferred count expects overall downward movement, but price doesn't move in a straight line. There will be consolidations and bounces along the way. The first target is at 1037, the final target at 657. The price point which differentiates the two wave counts at this stage is 1875.09. We may see that breached in the next week or two if this is the correct wave count. This wave count, the bigger picture, sees a huge expanded flat unfolding for a grand super cycle degree fourth wave. The expanded flats are really common structures, and their B waves move beyond the start of the A wave, as this one has. Supercycle B ends here. Supercycle C, if the expanded flat, would be reasonably likely to move beyond the, or very likely if this is the correct wave count, to move below the end of Supercycle A, which had its low in that important low, December 2015, I think 1046, 1047. To avoid a truncation and a very rare running flat. The target would see that achieved. The target is for Supercycle C to reach 1.618, the length of Supercycle A, at 657. That's a common Fibonacci ratio between A and C waves of expanded flats. Supercycle C must subdivide as a 5-wave motive structure. That's either an impulse or an ending diagonal. Within an ending diagonal, all of the subwaves must be zigzags. So if my degree of labelling and this structure is correct here as a diagonal for cycle wave 1, then we can eliminate a diagonal for supercycle C, because if supercycle C is a diagonal, cycle 1 may only subdivide as a zigzag. So supercycle C may be subdividing as a more common impulse, to be labelled cycle 1, 2, 3, 4, 5, and it has to meet all of those core Elliott wave rules for an impulse. 1 over here is a leading expanding diagonal, 2 a very deep zigzag. Second waves following leading diagonals in first wave positions are commonly very deep, and this fits that definition. Because cycle 2 is so very deep in relation to cycle 1, the Fibonacci ratio I'm using to calculate a target for cycle 1 is 2.618, hence the target is at 1037. Cycle wave 3 may only subdivide as a 5-wave impulse at primary degree. That will be labelled 1, 2, 3, 4, 5. Within primary 1, it may be subdividing as an impulse. Intermediate 1 and 2 may be over. Let's look at this at the daily chart, where this high for cycle 2 is this point up here. An impulse down for intermediate 1 subdivides very well as a 5-wave impulse at the hourly chart level. This upward movement looks very obviously like a 3-wave movement. This may be intermediate 2. It's possible though that intermediate 2 could continue higher as a double zigzag or sideways as a double combination. And so we can't be absolutely confident it's over here until intermediate 3 really starts to make a new low beyond the end of 1. And this little low here, not really enough for confidence that intermediate 2 is over yet. So the invalidation point, unfortunately, has to remain too far away to be of use. Intermediate 2 may not move beyond the start of 1, above 2065.89. The target for intermediate 3 is for it to reach 1.618, the length of intermediate 1, at 1699. The target for cycle 3 and supercycle C the same as at the weekly chart level. And the confidence point, if we see a new low below 1875.09, we can have some reasonable confidence in this very bearish wave count, because at that point this bullish wave count would be invalid. This wave count considers what if the bear market was over at that important low in December 2015, what if the bull market has resumed and I'm labelling it supercycle wave 1, subdividing as an impulse. Within it, cycle 1 and 2 are complete well off to the left of the chart. Here's 3, 4 a triple zigzag, and 5 unfolding as an impulse with primary 1 and 2, primary 3 an impulse with intermediate 1 and 2, intermediate 3 an impulse with minor 1, 2, 3, 4. If minor 4 continues any further, it may not move into wave 1 price territory below 1875.09. I have two sets of targets here for you. The first targets work together, the second targets work together. At 2078, primary 3 would reach 1.618, the length of primary 1. If price gets to this first target and either the structure of primary 3 is incomplete or it just keeps on going up, then attention will turn to the second target. Primary 3 will reach 2.618, the length of primary 1, at 2316. When we know which of these targets primary 3 is closest to and the length of primary 3, then we can start to have an idea which of these two targets for cycle 5 may be complete. The first target for cycle 5 to reach 1.618, the length of 1, at 2094. The second target for cycle 5 to reach equality in length with cycle 3 at 2587. At the daily chart level, this low here for minor 2, this low here, here's minor 1, 2, 3, 4. Now we need minor 5 to complete intermediate 3. Minor 4 should be over here. There's virtually no room left for it to move into. If we see a new low below 1875.09, this wave count, as I have it labelled at the daily chart level, will be invalid. I'll take a clean chart. I'll try and find a new bullish wave count for you. But this wave count already has multiple problems. If it gets invalidated at the daily chart level, the probability of a bullish wave count is going to reduce. Okay, let's take a look at classic analysis now. Which of those two wave counts do we have more support from this week? And I'd just like to note also that this high is just over $10 short of this high. This upward movement did not make a new high beyond this point. Some futures data has. I am doing my analysis on cash market data. And for stock charts, this continuous contract end of day data from CME is the closest we can get to cash market data. My data from bar chart is as close as a close approximation to cash prices for this market. I will always try and do my Elliott Wave analysis on cash prices, not futures. The cash market data has not been invalidated for that bearish wave count. And now after this upward movement, we've got some warnings, couple of shooting stars, a bearish engulfing candlestick pattern. Doesn't have push from volume, doesn't need to for downward movement. For the very short term though, we've got a couple of bullish long lower wicks suggesting we might get a little bit of a consolidation or bounce before price continues either downward or further sideways. On balance, volume has a weak range this week, no signal there. Volume for this week, this can last completed week, slightly increasing for this downward week, a small slight increase beyond the prior week, a little bit of a push from volume, just not very much yet. That's okay, gold's new trends can start out slowly. The ADX at the weekly chart level still indicates an upward trend. RSI didn't quite reach overbought, the trend is not extreme, so at the weekly chart level, ADX is still indicating there's an upward trend, but the bearish candlestick patterns tell us that that is in doubt. Stochastics back neutral territory and ATR showing an increase after the breakout from the triangle. What about the daily chart picture? There's a bullish reversal here in a hammer candlestick pattern. It's mostly coming in the context of a short-lived downward trend, hammering out a low here, and it's come with push from volume, pushing price lower down here. ADX at the daily chart level reached very extreme for the prior upward trend, and RSI reached into overbought. And then we have this huge bearish engulfing candlestick pattern, so at the daily chart level there's no upward trend anymore. Is this a pullback within an ongoing larger upward trend, or is this a consolidation within an ongoing downward trend? The hammer candlestick pattern suggests we may see upward or sideways movement next week. The push from volume tells us the short-term volume profile is bearish and suggests this may be a consolidation and a downward breakout may be more likely. On balance, volume has a weak range, no signal. We've been over ADX, RSI and stochastics well in neutral territory. ATR declining as price moves sideways. So the short-term volume profile suggests a downward movement, which would tend to support the main Elliott Wave count. That's all from me this week with your gold analysis. I hope all of our members are looking forward to an awesome weekend.